Did you know that there's an easy way to use stocks, bonds, 401ks, and IRAs to be able to get business funding for your business? Well, in this training, I'm about to reveal to you everything you need to know about using stocks, bonds, 401ks, IRAs to be able to get funding for your business. I'm going to show you how to use this kind of funding to get approved no matter how good or bad your personal credit may be. I'm going to show you how to use this kind of funding even as a startup business, even if you're high risk, even if you struggled to get other kind of funding before. I'm going to show you how to get 5% or lower credit lines to be able to fund your business, even if you don't have stocks, bonds, 401ks, or IRAs. We're going to talk about how you can tap into somebody else's to be able to get funding. And I'm going to sprinkle in some of my best tips and tactics to get the most money at the best terms. And if you stick around to the end of this training, I'm going to get you access to our funding vault of 27 killer ways to get money to grow your business. We got a lot to cover, so let's dive in. Securities-based financing and 401k financing, some of the coolest options to be able to get money for your business. And they are some of the coolest options because, first of all, credit doesn't matter. So even if you have really challenged personal credit, you're still able to get 5% interest rate credit lines or lower with these programs. And you can also get them if you have other high-risk factors. So you can get it as a startup business. You can get it without supplying any income documentation, no bank statements or P&Ls or balance sheets or tax returns or all that cumbersome documents that so many lenders oftentimes ask for. You can get this even as a high-risk business. So even if you're in a high-risk industry, even if you've struggled to get funding before, this is one of the most creative ways to get money to grow your business. Now, there's two types of financing we're going to talk about in this training: securities-based financing, where we're using stocks and bonds to qualify, and 401k financing, where we're using 401k and IRA. So let's talk about stocks and bonds first, securities-based financing. With securities-based financing, you can use stocks and bonds that are yours. You can also use this program with somebody else's stocks or bonds as well. And the reason I bring that up is because maybe you don't have stocks or bonds, but 75% of business owners get money from family and friends to get their business off the ground. Well, it's easier to go to my dad, for example, and have him use his stocks and bonds as collateral to get me a credit line than it is for him to liquidate those stocks and then actually get me the cash. So if you're going to get money from family and friends, as most business owners do, this is a creative way to tap into assets they may have, use those as leverage to get collateral. They still earn the interest, they still get the returns they always would have, but you have a credit line using that asset as leverage. So it's an easier way to tap in to assets that somebody else has to get money to start a business without them coming out of pocket with the cash. So with securities-based financing, a business owner can borrow as much as 90% of the value of your stocks and bonds. Now, you should have stocks and bonds that are worth $35,000 or more, whether it be you or a guarantor that's supplying those stocks and bonds as collateral. Now, you can get a credit line or a loan as low as 5% interest rate. Like I said, it's not based on personal credit or any other collateral or cash flow. It's just based on a review of your actual statements for those stocks and bonds. One of the best parts I love about this program is that you can still earn interest on the stocks and bonds. It's kind of like double dipping, really. It's kind of like cheating, I think, because what happens is you have money invested in the stock market. You're earning a rate of return on those stocks and bonds, right? But now you can use that as leverage, still earn the rate of return on the stocks and bonds, still keep them invested in the stock market, but now get a credit line using those stocks and bonds as collateral. So it's interesting because you can still earn interest on the stocks and bonds wherever they are as you actually continue to use that asset as leverage to be able to get a low interest rate credit line. So a lot of benefits using securities, stocks and bonds to be able to qualify for financing. Now let's talk a little bit about 401ks. Very similar. If you have a 401k or IRA, or someone around you has a 401k or IRA, you can use that as collateral to get financing. With stocks and bonds, you can borrow as much as 90% of the value of the stocks and bonds. With 401ks, you can borrow as much as 100% of the value of 401ks and IRAs. Now, a little bit of a different process because it's a rollover process. So because it's a rollover of your 401k or IRA, you don't get charged any tax penalties. It's actually based on IRS proven strategies. So there's no tax penalties. Again, you can get a 5% loan or credit line against the actual 401k or the value of the 401k. The only thing is the 401k has to be rollable, meaning it can't already be placed with another employer because the employer then won't let you use that as leverage or collateral the way you need to. But as long as it is rollable, as long as it's not with an employer, you can get as much as 100% of the value of that 401k or your IRA. And that's exactly how you use stocks, bonds, 401ks, retirement funds, securities as collateral to be able to get funding. So again, nice thing, credit doesn't matter. You can get it as a startup. You can get these as a high-risk industry. All you need to supply is 401k or IRA statements or statements that show the value of the stocks and bonds. Don't forget, they can be yours, or somebody else's. So I just gave you 2 ways to get financing, multiple ways. 401ks, IRA, stocks, bonds. You can also tap into somebody else's, which give you many creative ways to be able to get money to grow your business. So if you'd like to get approved, go to creditsuite.com/get funding. That's creditsuite.com/get funding, or just give us a call for your free consultation. On a free consultation call with us, we will qualify you for all the funding you may qualify for now. Actually, a lot of business owners call us and think they can't get loans and credit lines. We end up getting qualified for multiple programs. So on this consultation call, we'll qualify you for funding. We'll do a fundability assessment to figure out the things with fundability that you need to fix to become more lendable. And we'll get your business credit reports. We've Dun & Bradstreet, Equifax, Experian for free. They usually cost $250 from the bureaus. We get them for you at no cost to give you tips and tactics to improve your actual business credit. All that happens on a consultation call. Give us a call, 877-600-2487. That's 877-600-2487. You can also email us to set up a time for your consultation, info@creditsuite.com, or you can schedule your consult online at creditsuite.com/consult. That's creditsuite.com/consult. If you got value, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get money to grow your business.